order of events. Microsoft, obviously the most important. We got the numbers out. Let's go for it. I got my team with me, Kevin Green and Caroline Woods. Microsoft cloud revenue, $36.8 billion. That is basically exactly in line with the estimate. $64.7 billion for trailing revenues. $200 million above the 64.5. Right off the bat, this does not rank as a legendary Microsoft beat, so let's just start there. This is a company that has records in the last 2 years of beating by billions of dollars. So to basically meet and exceed it by a couple $100 million, I think is pretty small fry compared to Microsoft's really stellar past. So that is obviously a bit of a harsh criticism, but that's the standard. This is a gold standard company, and that's not really a gold standard number that we just got. So the market's coming off here. That's why those futures kept getting slammed. Caroline, I mean, look, Microsoft, we're used to seeing this company smash expectations, blow the doors off, and it basically just met.
Yeah, beat, on top and bottom line, but not by all that much. That cloud revenue obviously was the real big component that we've been really looking at. You had said it was basically in line with expectations, which was about the 20% growth mark, but some analysts were looking for as high as 30%. So certainly not impressing in terms of that metric, in terms of cloud revenue. I think that, that's going to be what's really the key focus here. Microsoft shares are down about 5% this month heading into the report, so I wasn't sure if expectations had kind of come in, at least only up about 12% year to date, but it certainly doesn't seem to be the case based on the initial reaction that we're seeing in terms of stock performance.
Yeah. What do you think, Kevin? Holding too high of a standard for this company, or is this a more muted number from Microsoft?
So they missed on intelligent cloud just by a little bit. You could call it a meet, but technically it's a miss.
Okay.
And then Azure did actually miss on a year-over-year basis too. Looks like that growth was at around 29%. They guided between 30 to 31%, so they kind of missed their bottom line, their bottom end range on their guidance. So that's probably why you're going to see the shares move to the downside, especially since Azure is such a critical part of their business as far as the growth opportunities that are there. Now, we haven't gotten the data yet when it comes to Copilot, so maybe that'll turn things around. Maybe on the software side, you can get a little bit of a head, a little bit of a tailwinds if you get some good commentary there. But overall, I don't think this is actually a really good report, just based on the high bar that was set. And if you miss those metrics, the market's going to take it out on the stock.
Yeah, they really need Copilot to work some magic here. They need some AI sprinkle on this thing quick. So the slight miss, the total cloud revenue, 36.8. Street was looking for 36.84. That's for their total cloud. So miss. Even if marginal, they're going to take a scalpel to these earnings, Caroline, and Microsoft, without an expectation to deliver a guidance, it kind of doesn't give us much to hang our hat on other than hopes that people went out and bought a bunch of Copilot computers. I don't know. I'm kind of a doubter.
Yes, I think that there's going to be a lot of explaining to do from Microsoft, not just in terms of how they're incorporating AI into PCs, but also just how much they're spending and how much of a return on investment they're getting. CapEx, I think, is going to be very key on that earnings call, because we saw with Alphabet that they got crushed because investors weren't very happy with Sundar Pichai's kind of just skirting around the issue, basically saying it's better to overinvest than not invest enough. Obviously, cloud is the key, important one to watch, but there are some other segments in terms of Microsoft as well. Personal computing revenue came in at $15.9 billion. The expectation was for more like 15.5. Then we talked about intelligent cloud, and then productivity and business processes revenue came in at $20.3 billion. The expectation was for 20.14. So that's actually a miss there as well. So not a good report from Microsoft, and we're seeing that reflected in the reaction.
Amazing that it still is doing really solid growth, just so consistent in the double digits. Obviously, they deserve credit for that, but market knows this and obviously was priced for. The other thing too is their gross profit margin below 70%. That's one of the lower ones in the last year and a half. They've been hitting mostly above 70%, so it just kind of edged down a tiny little bit. CapEx $13.8 billion, also a little higher than expectations. So They're not afraid to spend, though. I mean, it seems like they're pretty clearly convicted on their plan, KG.
Yeah, I mean, they continue to double down, talking about obviously the efficiencies within their business, but the opportunities that they have with artificial intelligence, and they will continue to double down. And this is kind of the situation we were talking about earlier here. When you're looking at the conference call, it's going to be a very tough bar now, since we already have the stock kind of sliding to the downside, because their executive team's pretty open and honest when it comes to their outlook for growth, as well as their intention to spend. And sometimes it just doesn't really meet the ears for a lot of investors as far as the way that they kind of lay out their vision moving forward. So they're going to have to really try to sell this during the conference call in order to try to turn this around. I find that to be somewhat difficult here in the near term. And then we'll also see what the response is going to be from NVIDIA and the AMDs of the world as well, right? If they are saying that they're going to continue to ramp up their CapEx spend on servers and GPUs, is that going to be a tailwind, or are we starting to see kind of the opposite reaction taking place?
Yeah. All right. And with no guidance, right? They're not going to give us a look forward. So, yeah, we've got the information we need to hang on. I guess it's about their language and the jawbone around AI to see if they can hype the stock back up. But at least, boy, we're clearing out the froth, I guess. So their personal computing revenues did beat, by like 400 million. That's decent, but it's only $16 billion. So just not going to take the priority here. I think we've said what there is to say. I mean, if you want to add one more, Caroline, go for it. But I'm looking at Pinterest getting blasted right now, down 20% like.
All right. I thought we were going to talk about some good news with Starbucks, but yes, let's talk about Pinterest.
We'll do the bloodbath first.
Go for the miss here.
Oh, well, it's like it's back down to where it was last quarter now. It's kind of disappointing.
Well, this was similar to what we were seeing, that is a preview for Starbucks. This was a beat on the bottom line, EPS of 29 cents, topped analyst expectations by about a penny, but sales came in short. Or actually, no, sales beat. Sales of $854 million, topped analyst expectations of around $847.8 million. So this was a beat on both the top and bottom line, but as you said, we're seeing shares get hit, so I'm assuming this has something to do with guidance here.
Yeah, it looked like Street was looking for them to deliver at least 10 million more than they did. Saying the next quarter revenue, 885 million to 900 million. Street was looking for about 908 million, so there you go. They're also talking about like AI-generated advertisements. So what do you think about that, Caroline?
Well, I think that, that's their Performance Plus platform in terms of their AI ad platform. So I think that, there's certainly going to be attention on that. I have it on my list of notes for things to listen to in terms of commentary from Pinterest. But I think that, that's obviously been, there's been some hype around that. But Pinterest shares obviously haven't had that great of a performance so far this year. They were essentially flat heading into this, maybe up a little bit less than 1%. But up 30% over the past 1 year. Looks like they're going to be, taking a hit on this report. So, we'll see if any commentary about AI can kind of turn things around, but doesn't look to be the case, at least right now.
Yeah, I've been kind of like hopeful on this stock the last couple of years, and I feel like I was validated a little bit in the rally because it seems like there's so much low-hanging fruit for them in such a highly materialistic society to take the AI and to match people up with what they want. They see it, looking at a living room, how it's designed, boom, boom, buy, click, give me what I want. So the fact that actually that is kind of what they're doing, and there's 12% user growth. I don't know, is this a harsh reaction, KG? Because they missed by 10 million on a 900 million? I get that's a sizable miss, but still, they're sending this thing back to the grave.
Yeah, I mean, you don't want to miss on top line, and it does appear their operating expenses are going to be between 485 million and 500 million. So it does appear that they're going to have to spend some money in order to get these AI projects ramped up. And if you're spending more money and you're not going to have that top line growth as the street expected, then you're kind of looking at contracting margins, at least in the near term. And so you're not going to really receive a premium for that at this point. But maybe down the road, once they do perfect their business, especially when you're looking at AI, that could be a tailwind for them. I think also the other question is going to be any type of economic headwind headwinds? Are they going to have some problems? Are you going to see a little bit of slowing when it comes to purchases on their site as individuals might go towards maybe some big box retailers or maybe going to an Amazon that might have some cheaper prices for goods? Now, their goods are a little bit unique in some respects, but maybe there's also some replacement or alternative means that might be a little bit cheaper too. So I'm curious to see if they're going to address that on the conference call.
Okay. All right. Good look forward. Let's talk some breakfast and some coffee. StarBucks coming into this down near 3-year lows, 1-year lows too. Doesn't look like the worst report, but they did miss sales a little bit. They opened 526 new stores in the third quarter. I mean, that's got to be like mostly global. This is getting insane, the scale of this company. What do you see, Caroline?
Problem is they just need people to come into those stores and times other than morning. They've been trying to increase their promotional activity, but it's never when I'm there. It's always in the middle of the afternoon. But yeah, this was a mixed report here. We're not seeing a hugely negative reaction, though, to it. Could be because Starbucks has just gotten absolutely clobbered. But if you take a look at the numbers, adjusted EPS of 93 cents was in line with what analysts were expecting. The sales miss of, you mentioned $9.11 billion, fell short of the billion dollars of the $9.22 billion that analysts were expecting. So sales miss. I was really curious about how this would react, though, in terms of stock price performance after McDonald's missed on both the top and bottom line and still managed to rally after that report. So we'll have to see if we get something similar from Starbucks. Obviously, China has been a weak link for Starbucks, so I think commentary around there is going to be important. It says North America revenue came in at $6.81 billion, international revenue $1.84 billion. I have to look at the comps there, but I think that the key here will be same-store sales as well, which I'm still just trying to look for here. But I know that the expectation was for around the second negative quarter for same-store sales. The expectation was for around 2.7% decline, with U.S. down about 1.6% and China down more than 10%.
Wow.
So I think that that's going to be really key here.
How much? I mean, China seems like massive blowback. Like they're going Luckin all the way. Whatever China alternative there is to like any U.S. product at this point, it seems like there's a lot of like pressure to go that way, KG. I mean, all the stores they built and the whole strategy behind it, to see comps falling double digits in China, it's like, boy, did they just like, I don't know, like how do you recover from that? Like, they've got all these stores open now.
I mean, that was their growth story in the past, though. So they continue to double down on that strategy, opening new stores, and hopefully within a year and a half, they would be operationally profitable. And so that's just not the strategy moving forward. I'm going to be honest with you, Oliver. I'm not sure why the stock isn't selling off. Maybe it's just so down in the dumps. You're talking about those comp same-store sales declined 3% on a year-over-year basis. Estimate was 2.35%, so they missed there. If you're looking at China, comp sales down 14%. Now, let's also put this in perspective. China is just getting out of their COVID restrictions. A year ago, they were just getting out of COVID restrictions. So a year ago, you had better comps than you do now. That's a problem. And then U.S. comp same-store sales sitting at 2%. The only bright spot is the fact that they have some efficiency initiatives that are taking place, and they say that they're a little bit ahead of schedule when it comes to those initiatives, and they are starting to see some bright spots there. But how much can you bid up a stock? How much can you provide a premium for a stock that's all about expense efficiency rather than top-line growth? And seeing those comps from one of the most profitable areas of your business 5 years ago, seeing those comps really decline at a very rapid rate. Once again, I'm surprised that we're not seeing the sell-off.
Yeah, no, I'm with you. It seems like they really got themselves into a mess, and it's going to be hard to get out of it. Because I get that, yeah, China restrictions and stuff have really limited it too, but it's like every business there, they're really trying to shift the customers towards the Chinese versions. And Luckin seemingly is kind of that alternative there that they're building. Like it's like a race to put one on every corner. Yeah, maybe technical support at $71 basically. I mean, it seems like the only thing we got going. But that doesn't mean they're not going to charge us $7 for a latte here at home, Caroline. So U.S. holding it together.
I guess, well, not really, because as Kevin pointed out, U.S. same-store sales fell 3%, and the expectation was for around 1.6%. So that actually came in worse than expected as well. So I guess the boba teas and the the croissant with coffee $5 specials aren't bringing enough people in. So I'm kind of surprised we're not seeing a sell-off as well based on some of these numbers. But this is what I guess down 20% year to date means. Okay,
yeah, totally. I'm gonna go do some charity and get a bacon Gouda or like 3, because I can down like 4 of those bad boys. And I'll do my part to help turn the train around. Thanks, Caroline. Thank you, Kevin Green.